Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be talking about a trade idea that I'm looking at. Now this one's a bit of a throwback. It's something I've been talking about on and off for the last couple of weeks, weighing up whether or not I still am interested in this trade, and at the moment I've sort of waxed and waned in terms of being interested in this trade, but at the moment I am interested in it. So let me explain what's going on here. Okay, we've got euro dollar here. These are one-day candlesticks, and the first thing to note is, of course, that it has been in a downtrend, very consistent downtrend actually for most of 2022. You can see this downtrend actually began all the way back in sort of mid 2021. But anyway, the technicals we're looking at here are for 2022, and you can see that. Let's get rid of that arrow. In the last couple of weeks, things have been very, very range bound, okay? Because there's been a couple of things going on. You've had risk appetite coming back quite strong. In late July, you had markets pulling back on their Fed tightening bets. So that combined with risk appetite both weighed on the US dollar. But then at the same time, you've also had economic data coming out of the Eurozone, which has been pretty ugly. And more recently, last week, we saw data coming out of the US that was strong. Okay, remember the ISM services PMI and the jobs data. And that has led to a rebuilding of Fed tightening bets. Yet still, euro dollar has not broken out of this range. I think the fundamentals are shaping up for this pair to continue moving lower. Obviously, this week, we do have CPI data coming up. Now, if that does show what it's expected to show, which is a moderation in headline price pressures in the US, a drop to 8.7% from above 9% in terms of the headline CPI, and a big drop in the month-on-month increase in CPI, well, that could be positive for risk appetite, and that could lead to a bit of maybe profit taking on from people that have been holding long dollar positions for a while. So I think there's a risk that in the short term we could see a bit of a further break higher out of this range we've been in for the last couple of weeks and towards this area of resistance around 103.50 that I've been talking about for quite some time. Okay, if we were to break up here, I think that could potentially be an opportunity to add to long-term short positions on euro dollar because, as I've been mentioning, data out of the US economy recently regarding economic activity and the jobs market has been stronger than expected. Okay, it shows that the US economy, despite what the GDP figures recently said about the US economy being in recession in the first half of this year, other indicators show that the labour market remains good and business is still growing, even if it is at a slower pace. Meanwhile, in the Eurozone, things are getting worse because the energy crisis continues to get worse. Gas and electricity prices continue to go through the roof or remain at massively historically elevated levels. We're seeing it in the data. We had the July PMIs out, the final versions last week. We're soon going to get the August PMIs, which are probably going to be pretty ugly as well, showing that Eurozone business is in contraction. And this means that, maybe if tomorrow's US CPI data does result in some modest pairing of Fed tightening bets, the ECB still is not going to be anywhere near as hawkish as the Fed because they face a much, much weaker economy. And even if inflation in the US is shown to have peaked, from the sound of Fed policymakers who have been speaking recently, a 75 basis point rate hike in September does still seem pretty likely. I mean, markets are still assigning like a 70% chance to that. And, I certainly think they'll probably go 75 basis points. But anyway, all of these fundamental arguments for me mean that I don't see any reason for a prolonged euro-dollar rally. Obviously, it could be proven wrong. If it breaks above this long-term downtrend and above 103.50, then why is that arrow not showing up? Then it does open the door for some further upside. Oh, I can't draw that arrow. But anyway, there's some further upside, potentially as high as 106. But I think the fundamentals don't really warrant such a move, okay? At the moment, anyway. If we're talking about a US economy that's still stronger than the Eurozone economy, even if it's slowing, and a Fed which is still much more hawkish than the ECB, even if it's perhaps not going to be quite as hawkish as some people feared. But anyway, guys, I hope you enjoyed the video, and I will see you all in the next one.